Welcome back to Intelligent Investment Today, the podcast concerned with all things value investment. In each episode, we take a look at a different topic from the investment landscape and attempt to apply the lessons as laid down by the man widely considered to be the father of the craft, the late great Benjamin Graham. In this edition, we consider the importance of thinking and acting like an owner in any business in which we hold a stock position. We'll talk about why this is such a vital aspect of successful value investing from both a practical and psychological point of view, and we'll see why investors who do act like owners are better placed to see the fruits of the labour translate into long-term investment success. So without further ado, let's dive right on in. As ever, sit back, strap in and get ready to take on board another lesson in value investment as inspired by Benjamin Graham. Now let's get something straight from the get-go. If you own a single stock in any business, you are a de facto owner of that business. This might seem a somewhat obvious statement to make. I'm sure this fact will not be lost on any listener to this podcast. But for the vast majority of investors out there, even the quite sophisticated ones, this literal fact routinely fails to register. Why this is so is perhaps not all that difficult to work out. Stock investment for most is purely transactional. The businesses themselves faceless. And this is often the case because a typical investor will only invest for the short term, hoping to turn a quick profit. The average holding period for a stock position has steadily dropped throughout the decades. In the 1950s, for instance, the typical investor would on average hold on to their stocks for around 8 years before selling out. But by 2022, a New York Stock Exchange analysis conducted by Reuters found that investors these days hold on to their stock positions for more like 5.5 months. And this is the average, remember. People like us are likely inflating that average, and I would expect the median figure to be lower still. If people are only holding on to their stock investments for a few months at a time, it's hardly any wonder why they don't bother to think of themselves as holding an ownership position in their businesses. And that's a shame because thinking and acting like an owner brings with it many benefits. It fosters a feeling of belonging and a sense of responsibility to a particular business. And this allows for an ever-deepening understanding of a company and how it operates. Someone who considers himself to be an owner, unlike some indifferent shareholder, is not just going to pay attention to their holdings on dividend payment days, or when big rises brings the opportunity to cash out at a quick profit. An owner will actively want to know more about their business and seek out all the relevant information because they are emotionally as well as financially invested in that business. The benefits of this are multiple. Firstly, the information that they hold will be far above and beyond what the average investor in the street will know about the business, giving them a much better idea of when the right time is to buy or sell. They will also likely develop strong emotional ties to the business, meaning that they will not be tempted out to sell for a quick profit if the long-term prospects promise greater gains still. And this next reason is the important one. An owner of the business is likely to want to actively involve themselves in the decisions made by a company. The average investor mostly overlooks the fact that a stock position bestows upon them a right to vote on important issues affecting the business. I've not been able to find reliable data to say what percentage of investors actually do take part, but estimates seem to put this figure at between 20 and 30%. And of course, unless you're actually thinking like an owner, you can probably think of a million other things you'd rather do than vote on dividend or remuneration policy, even if you did understand what on earth was going on. I believe that one of the main factors investors have shifted away from thinking like an owner is the increasing gamification of the investment process. 30 years ago, the act of purchasing a stock was a somewhat convoluted and tiresome process. You actually had to physically pick up the phone, speak to your stockbroker, who would then try to fulfill your order. If he was successful in executing your trade, then you would receive in the post a few weeks later a shiny stock certificate, which made it quite clear that you were the proud part owner of that particular business. And I can tell you there's nothing quite like having these bad boys filed away in a drawer to remind you that a little piece of that business is all yours. Then in the late 90s came along the internet, of course, and the online trading platforms, which, it must be said, have made trading shares so much easier and cheaper. The downside to these platforms, however, is that you no longer receive that lovely stock certificate, and typically you will not even be the registered owner of that stock. The business you've invested in will not even know of your existence. This is because the broker will normally be the registered owner of the stock and be holding them on your behalf. I think this disconnect between the business and the ultimate owner makes all the difference in the relationship between them. One, you don't have that stock certificate to spell out what is actual fact, that you are the part owner of that business. And two, technically, legally speaking, the broker is the registered owner. In many cases, the right to vote on important issues affecting the business will also be impacted. Many platforms do now have in place workarounds so that investors can have their say. But in most cases, this can prove to be more trouble than it's worth. All in all, I think it's pretty clear that investing through online platforms has affected the perception of many investors that they are ultimately the de facto owners of the business in which they own shares. What is unquestionable, ownership these days certainly feels a whole lot less tangible than it once did. So where does the value investor fit into this equation? Benjamin Graham made it very clear in his books the importance of viewing oneself as the actual owner of any business in which shares are held. And naturally, the concept is a good fit for the way we do business in general. Unless we really do receive an offer we can't refuse from Mr. Market, it is likely our holding period is going to be long term. In fact, the longer the better. This means that even if we're not paying all that much attention, whether we like it or not, over time, we're going to learn a lot about that business. And we're slowly going to become emotionally attached and start to think of it as your business, not just some random line on your trading account. It is probably fair to say that every time I come to sell a position in a business, there is a piece of me that weeps. Even though my head tells me it's the right time to sell, I have become emotionally entangled in that company. And that is the way it should be. It is confirmation that I really do see myself as an owner and not just someone tagging along for a quick profit. And thinking of ourselves in this way bestows upon us huge advantages. It allows us to see the wood for the trees, not to be tempted by taking quick profits if better value can be had through staying put. It means that naturally we're going to be more inquisitive and take more interest in that company. And over time we will better understand how the company operates, as well as its likely prospects, gifting us an insider view that will likely benefit any qualitative analysis greatly. We will also likely have a firm grip on the financials, meaning that we're also much better placed to know what the business is worth quantitatively than some investor who is looking at the business afresh. All in all, thinking and acting like an owner fosters a feeling of belonging to a business, and nobody's better placed than an owner to know what price a business should be trading at. And that is where the opportunity for us lies. On that note, I shall draw this edition to a close. I do hope you've enjoyed hearing about the importance of recognising an ownership position when it comes to an equity holding in a business. If you have, please do consider adding to playlist. That way you will be alerted whenever a new edition lands. And do continue to spread the word so we can make this as large a community of like-minded investors as is possible. Do join me next time where we'll be discussing another interesting topic from the world of investment. And once again, we'll be attempting to draw lessons from the man himself, Benjamin Graham. I'm David Coombs. This has been Intelligent Investment Today. Until next time, stay safe and happy investing.